We're live. All right. Welcome, Richard. Thanks for
Dave.
joining us. Good to see you again.
I know. Getting very frequent events these days.
I know. How great. All right. Welcome to Let's Talk Markets Live for Thursday, April 17th. Last week was a fun week. We traveled to Washington and got to participate in an SEC roundtable on the future of crypto regulation. It's a series of roundtables the SEC is doing. This was the second one. It's great to be joined by my old friend Richard Johnson from Texture Capital. Richard and I have known each other for a long time through all sorts of market structure conversations and debates.
Exactly.
And now we're enjoying, the future of market structure. Richard's the CEO and founder of Texture Capital, a broker-dealer involved in tokenized securities. So there's plenty to talk about there. And we're hoping to just catch everyone up on what happened last week at the SEC Roundtable if you didn't get to see it, answer any of your questions if you did, and try to get a handle on what's next for blockchain and crypto at this really, deeply uncertain moment for the global economy. So, Richard, again, thanks for joining us. Why don't you just start off with like a bit about your background? Tell people, what you've done and how what does Texture Capital do, and how did you find yourself on the crypto panel?
Yeah. Well, we have known each other a while. In fact, we've been kind of market structure nerds since before this really, well, not quite, but since kind of before this asset class became mainstreamed and just made the whole market structure conversation, exponentially more complicated. I started my career here in the States in electronic equity trading. Electronic trading, this is, dating myself, 2000 was pretty new back then. It was maybe 10% of total volume. At the time, we had a duopoly of the NASDAQ and the NYSE, and 80% of all trading in NASDAQ stocks happened on NASDAQ and 80% happened on NYSE. Of NYSE stocks happened on New York Stock Exchange. And then we had kind of the birth of ATSs and ECNs, which really did a lot to improve market structure, but they also made it more complicated. And then we went through something called Reg NMS, which we'll probably touch on later, which was kind of, I can't believe it's almost 20 years old now, Reg NMS, but an attempt to kind of create a new rule book for the electronic trading era. So I stayed in the electronic trading space. I was at a few different companies. My last seat in the space was at SocGen. I ran electronic trading for them up until 2014, in the Americas anyway, up until 2014. And then at that point, I found Bitcoin and got very intrigued by that and approached it with a trader's hat, looking to do, trading algorithms, smart routers and so forth for the asset class. It was super early back then. I actually remember there was about $100 million a day trading notional value when I got into the space, and 50 million of that was offshore in China. So it was a really, really small market. And I did some consulting for some startups. And then I actually went to a market structure firm called Greenwich Associates and started doing research on fintech, blockchain, and equity capital markets as well, because that was my background. And then that was, by the way, kind of the early days of that, where the blockchain, not Bitcoin mantra was going on, and a lot of banks were investing in blockchain only, looking at it for post-trade purposes. We've seen some moves away from that. I was never a fan of using it just as a post-trade technology. I really think it's about digitizing the asset. And then then the ICOs came out and found tremendous market fit, shall we say, product market fit, if not completely legal or regulated product market fit.
And some kind of fit, right?
Yeah. There's a big boom there, driven by the kind of the Ethereum and the ERC standard. And Jay Clayton was the SEC chairman at the time. He came out and said, every ICO I've seen as a security, and these platforms need to be regulated. And I really set up Texture Capital as a kind of a solution to that. It's like, certainly when you saw people, doing token offerings that were really VC capital raises or something like that, and a lot of people were, even back then, losing their shirt. It seemed like, I wanted to create a company that could help people do regulated token offerings, primary offerings, and also provide a regulated trading platform. So we were one of the first firms to go to FINRA, put in for a license, and we got approved for digital securities offerings. So digital securities meaning securities with a blockchain record, and we have an ATS, alternative trading system, for secondary trading. And we help clients raise capital through digital securities offerings. We have the ATS for secondary trading, and we added a transfer agent last year as well. And that's kind of how I've got in the space. Texture's been operational for we spent almost 2 years getting our licenses, but we've been operational for about 4 years now, and seeing I think we're calling the space RWA now, tokenized real world assets. That's what we're about.
Okay.
And how did I end up on the panel on that round table there? Well, we are a SEC regulated entity and have been for 5 years or something. So we did kind of come in and register, as they say, but we've had a dialogue with the commissioners, not as much during the Gensler era, but obviously when the crypto task force got formed, we sent our comment letter in, and I think that's kind of part of the reason I got the invitation to join the roundtable there.
Nice. All right. Well, before we get into the roundtable, a couple of people have popped into the comments on YouTube. They're saying Solotex. What's Solotex?
So last year we formed a strategic partnership with a company called Sologenic.
Okay.
And we are jointly developing a product called Solotex.
Okay.
Get it?
I got it. Yeah. Got them both together. There you go. Okay.
And so we've been pretty kind of secretive and stealth about it. We did an AMA a few weeks ago on Cointelegraph. Essentially, what we are looking to do with that is to create tokenized representations of public securities, public stocks that people can hold in their wallet alongside their crypto. And really, we're building a kind of retail trading platform for public stocks targeting the Web3 community.
Okay, so
there's a lot of Sologenic supporters out there.
I can see that. I mean, we're already getting a couple of comments, and I remember I think I posted about you, and there were other replies that said Solotex, but they don't say anything about it. They just say Solotex. So. Okay, so this is a tokenized security platform, and you're tokenizing US equities.
Yeah.
So that's interesting. That's like a hot topic these days, but was also, when FTX went down, obviously they had some tokenized securities, and they claimed that those securities were backed 1-to-1. Now, FTX was just massive fraud. Obviously, that was a misrepresentation. There was no backing for their tokenized securities. But you think that there's a great future in tokenized securities. So as an aside, just because I'm very interested in this topic, let's talk about that for a second. What do you guys do that's so different, and why do you think it's special?
Well, I'm not going to be able to say too much about it because it is pending regulatory approval.
Fair. Okay.
But I think there is tremendous potential. I think there's a lot of demand for a start. First of all, that's what's driving it.
Is this like non-US people who want exposure to the US stock market?
Well, we're a US firm, so we're getting licensed here in the US, but I think we do have plans to maybe expand internationally. I think that's what you see a lot of competitors out there doing, are creating tokenized, because it's very difficult. First of all, to truly tokenize public equities, which are every single one of them is custodied at the DTCC. And they, you need to go through the traditional rails and so forth. So we're doing this project in stages. So the stage 1 we hope to be launching in Q3, which will be really simply kind of enabling funding your account with USDC. We're going to be we want to mirror as much as we can of the crypto market. So we can't do 24/7 trading, but we'll do 23/5. And we'll be able to kind of, we'll mint tokens in users' wallets representing the securities they hold, but the underlying securities will still stay at the DTCC at the end of the day.
And everything will be backed 1-for-1.
Absolutely, yeah, exactly. And I think there is, if we do get there, there's huge potential in the public equities market for fully on-chain tokenization. When you think about so many of the things that you need to go through, or so many things that happen in the market, and we've got other rules around it, like Reg SA show, so you can't short something if you don't own it, like stock lending and so forth, and all that is done today with easy to borrow lists, reg show rules and so forth. And when you've got a transparent single ledger on chain, we've already seen how lending is taken off in other kind of parallel asset classes. An individual user can decide if they want to lend out their Tesla to somebody who wants to short it, as opposed to having the clearing broker make that decision for them. And they can kind of directly earn the lending fees for that. You can also prevent naked shorting, because you'll know if somebody's borrowed it or if they actually own the stock that they have. So there's a lot of benefits we can eventually bring to the space, but there's a lot of work ahead of us. That's kind of the public side.
We could have the whole episode on this. That's so interesting. And I don't know if you know this. I think I mentioned it to you before that we actually petitioned the SEC for rulemaking recently on Reg Show. I didn't. Yeah. So we petitioned them for 3 changes to Reg Show. 1, a universal pre-borrow. So getting rid of reasonable grounds, which is a term a lawyer can drive a truck through, right? Getting escalating fines for FTDs, and getting rid of the market maker exemption. And I think a lot of people have asked us related to those, what do you think about crypto and the idea of having things on blockchain, so there is actual traceability to borrows, as you're talking about here. And I mean, I think that's the kind of innovation that would make so much sense in the stock loan market.
Yes.
Right.
Yeah. I think you could potentially do that. You could have some kind of side ledger doing that as well, I suppose. But I'm a fan of digitization.
Okay, so anytime we mention any of these terms or anything like this, I always get the same question. So before I get the question, I'm going to ask it to you, and this is going to require, I don't know so much speculation. I think with your experience, you'll have an easy and quick answer to this, but no one ever trusts my answer to it, so I'll ask you about it. FTX had all these tokenized GameStop, whatever you want to call them, tokens, shares. I don't think you can rightly call them shares. They're backed by nothing. A lot of people think that was a loophole in the stock loan market, and that these tokens could be used as locates for short selling. Does that theory make any sense to you at all?
Well, I mean, FTX was just making it up, really. I think
exactly. They were just making it up.
Going on there, yeah. Because they were obviously in the Bahamas. There was barely regulated. In an ideal world, you'd have a custodian or a central securities depository holding the underlying securities.
Right.
You'd make sure that if you're issuing tokens, they are kind of backed 1-to-1, and so forth. Yeah. So I didn't know that FTX had GameStop tokens out there. To be honest, that one's new to me. I knew some of the other antics they're up to, but it was all kind of just make believe. I think
it was just make believe, right? So like with what you're talking about, where you have tokens backed 1-for-1 with shares of the GTCC, one can envision being able to control those and lending them and using them even as locates. But for some random ledger entry on a random blockchain, that's not something anyone could use as a locate, for example.
Yeah, no. So I mean, just you can't just go on pump.fun and create a token and say,
right.
Here, I'm going to lend you my Tesla.
That's it. That's the perfect analogy.
Yeah.
Unlimited locates for everyone. Just go to pump.fun.
Exactly. Yeah.
All right. So anyway, the point of let's get to the point of our conversation, the crypto roundtable. So Richard and I were on that last week. The focus of that roundtable was trading of crypto securities. Obviously, there was quite a bit of time spent talking about both crypto securities and non-securities, how those could work together, how we could bring it into a regulated system. What did you think of the roundtable? How did you feel it was received? What was your experience with it generally?
So I've been interacting quite a bit with the SEC this year in 2025. Probably it was definitely a lot more in 2025 than I had 2022, 2024. And so there was a lead up to it as well. And you actually missed it. There was a dinner the night before where we kind of all, people got to know each other. Or I probably knew half those people on the panel beforehand anyway. But there's some folks I hadn't met before. Commissioner Peirce was at the dinner, and a few other, other crypto task force people as well. Funny story about that actually is that for the first roundtable, everyone had gone out to dinner at a restaurant nearby near the SEC's office. But since then, Doge has come in, and they weren't allowed to do that, and they also weren't allowed to have someone else pick up the tab because influence and whatever.
Yeah.
So we all had to. We had dinner in a lovely conference room that they've got there, but we had to Venmo one of the members of the crypto task force afterwards to pay for our food, which I thought was quite funny. Yeah. But it's a great. And I'm kind of bringing this up because we had a private dinner the night before with SEC staff. It's probably 50-50 task force and the panelists there, and just a very open conversation. They really want to find solutions and work with you, and very, very engaging. If you saw Hester's opening comments about apple cider vinegar, that was the result of one of the conversations she had at the dinner before. So she was improvising a little bit there. But in general, I think very welcoming, not a hostile agency anymore for folks. You can go in and talk to them without fear of a Wells notice or something. In fact, Catherine, who was sitting to my left, said the last time she'd met with the SEC prior to that was having just been served a Wells notice at Uniswap.
Jeez. Yeah. So, I think for people to understand the context of all this is that the two SECs before this current Trump administration SEC, so his first SEC and then Biden's SEC, there was a lot of hostility towards crypto. There was a lot of, it was only regulation by enforcement. There was very little guidance. There was no legislation out of Congress, really. And, it was just like a complete kind of, it was just punted every which way you look. No one really wanted to take responsibility for establishing a regulatory framework for crypto. And so it was a lot of, turf war between the CFTC and SEC, and very expensive enforcement actions out of the SEC towards crypto companies. And the main effect, which I thought was one of the first comments made on the roundtable, which I found really informative, was that it just pushed trading almost entirely offshore. Right? So 85% of all trading in crypto is now taking place outside of the US. And innovation in crypto is mostly taking place outside of the US. And this is an attempt led by Commissioner Peirce and the Crypto Task Force, but certainly with buy-in all the way up the chain, to try and figure that out, at least from the SEC's perspective, right? And the SEC can only do so much, but they're at least trying now to figure out how can they approach crypto, how can they, and my theme, at least where I started on the roundtable, was focusing on investor protection, and I do feel like they take that seriously, and I'm glad to see that they're trying to figure out how do we protect investors and foster innovation, and start to bring this back into the U.S., bring innovation back into the U.S., and lead the way in this burgeoning and growing industry. So from my perspective on the roundtable, I was impressed at sort of the level of dialogue. Thought it was a really good group of people. A lot of them had excellent points to make, very diverse set of perspectives. And in my conversations with SEC staff, there was some FINRA staff, the Commissioner Peirce, it really felt like they were listening and excited that this engagement was happening. You think that's accurate?
Oh, absolutely. Yeah. I think you mentioned that trading is going, has a lot has happening offshore. The other thing is that I think it's worth pointing out is because you haven't really been able to do anything in the US, what you've seen an explosion of meme coins, because it's all you could launch without getting in trouble, was really saying this thing is actually a piece of, and it has no value, and it's going out there. And that's why, because you couldn't put, it was so difficult to put securities on chain or do staking or do lending and things like that. With respect to the talent though and the innovation, I think that it is kind of technically offshore, but really the teams and the companies are still US based.
Okay.
If you know what I mean.
Yeah, sure. Yeah. Understood. Looks offshore.
Looks offshore, exactly. Yeah. But that's one of the that's one of the great things about America, is that there's a tremendous, brimming with innovation and entrepreneurship.
Everyone is just hoping for the day they can switch off their VPN and boom, everything comes back onshore. Right?
Yeah.
Not saying that that's how I interact with the ecosystem.
Nobody does that.
No, nobody would do that. All right. So, what do you think? I talked about investor protection. How would you summarize maybe the big topics at a high level that we discussed?
Well, I think I was quite pleasantly surprised that really everyone was pretty much in sync about that and finding solutions to that. Nobody wants another FTX. That wasn't good for anyone, Yeah. We had a specific set of recommendations, and again, I found that was pretty well aligned. If you didn't see the roundtable, or if you didn't read our comments on that, and we are saying that essentially the thrust of our position is we haven't done anything for 4 years. We're 4 years behind, and we need a federal system for regulating crypto to ensure investor protection, to ensure fair and orderly markets, and to foster innovation. And you kind of already have like 75% of what you need and 80% of what you need with the existing broker-dealer structure. So I would like to be able to offer my customers, crypto alongside securities. Why can't, you can hold a Bitcoin ETF. Why can't you hold Bitcoin in your portfolio? And have similar levels of protections and similar confidence in the intermediaries you're working with. And I heard a similar position from Coinbase, of all people on that panel, who I may have expected to have a different stance. But in general, I felt that there's a lot of alignment around that, and I think it is going to be the path forward. That's my kind of prediction.
It was funny. Last week, before the roundtable, Richard and I spoke, and I just read the piece that he put out. And if you haven't seen it, I would very much recommend going to read it. And I said, geez, man, like, you're saying all the things I'm going to say. It was great, though. I mean, it was good to see, because I think those of us that have been in the industry for a while, we see the benefits of the securities laws, right? We've seen how they protect investors while fostering innovation. I mean, look, they need work. They always have. And I think, I've been pushing for reform for a long time. You have, in different ways as well. No one's here saying that they're perfect, but we've also then seen the other side of it, which is sort of unfettered, activity in crypto, and we've seen people hurt. And I think I made a point that I it was funny because I should say you made the point we should merge the CFTC and the SEC. And obviously this is something I agree wholeheartedly with. And then, we talked a lot about that. And my point was that it's not just the right thing to do, because we're the only market out there that has this sort of split between commodities and securities. But this jurisdictional infighting, this turf warfare, has caused real investor harm. And I think that's a serious problem, and it's totally unnecessary, really. So not that it's a practical suggestion, but you can hope and you can push for the right thing, even if it's not likely to happen. At the same time, by talking about it, maybe we can encourage the SEC to work very closely with the SEC. I'm sorry, the SEC to work very closely with the CFTC, and maybe in working together in a logical way, they can kind of get past some of these issues.
Yeah, no, I threw that out there. It's kind of an offhand comment because there was a bit of a bifurcation in the FIT 21 bill, which was saying, oh, these assets should be regulated by the CFTC and these should be regulated by the SEC. My point is that that's not where people are. People don't look at their portfolios containing CFTC regulated assets and SEC. They just look at that stocks, bonds, crypto, whatever. So it's a bit of an offhand comment, but it did kind of, catch a wind there. There was, there's some laughter and even some applause, I think, from the audience on that one. I think.
And from me, for sure.
you certainly, and other panelists,
Yeah.
like, wry smiles from, SEC staffers there.
Yeah.
It is impractical in the short term. Let's not get into all the reasons around that. But at the same time, let's not exacerbate the situation that we have by reinforcing this ridiculous separation of regulatory powers as new laws are passed. If anything, as we pass new laws, let's kind of harmonize them and give the SEC and CFTC joint control or more cooperation or whatever it is. I think we can find the pathway forward where SEC regulated entities can help clients get access, investors get access to crypto in a fully compliant and regulated way.
Mm-hmm. So, okay, let's talk about, like, I think what was one of the, maybe nothing was terribly contentious. I was actually surprised to a certain extent because to me, the conflicts of interest around vertical integration are a serious issue. Obviously Coinbase was on the platform and you guys are to an extent integrated. But it didn't seem like there was a ton of disagreement, but maybe that's because nobody really thinks anything is going to be done about it. I don't know. What do you think? Like, here we see in this space, you generally have the broker, some type of trading platform, not necessarily an exchange yet, but some type of trading platform, and custody, sort of all wrapped up in one, where in the traditional world of finance, that's not the case. And there are strict separations between those. And not just, one of the points that was being made on the panel was, that's because of settlement times, and settlement's not instantaneous, and therefore you have to separate these things. But, that's not exactly right? Like, there are hard separations because of problems in the past that led to investor harm. Those walls are for investor protection as well as for technical reasons. So, what do you think about that point? And, do you think it's problematic that crypto has gone in that direction because there has not been regulation to prevent it? And do you think anything's going to change there?
So I think certainly the reason that happened, it was because there's no regulatory framework and companies just started doing whatever they could. So they started vertically integrating. There'd be an exchange, but the exchange would onboard retail customers directly as opposed to through a broker dealer, which is how you access NASDAQ, etc. today. There's no clearing agency or custodian, so they would, they bolt on custody functions, which kind of evolved into, what kind of regulatory license can we get here? Look, there's a special purpose trust license. Let's do that. Or there's a South Dakota trust license. Let's get that one. And kind of patching it together, and it's kind of worked, I suppose. But again, it hasn't, because you have, for the companies that have done well, it's functions. But then you've got the examples of FTX, of course. And others. The question is, is the SEC going to unravel that, or is Congress going to unravel that? I think they probably will, but there'll probably be some kind of grandfathering or transition for the firms that have this vertically integrated arrangement.
All right, so let's go a little further down the path of what's Congress doing. let's steer off of the roundtable for a minute. What is going on in Congress? I assume you're on top of it and keeping track of it, how it's going to affect your firm. Are you encouraged by what you're seeing? Do you think there are real answers coming, or is it still a political shit show?
Not sure. There's a stable coin bill. There's two. They're going to get reconciled, and I think that looks positive. There's supposedly going to be the market structure bill, which will be version 2 of FIT 21, again by August. Tom Emmer has said that's what his target is. I haven't seen too much of that yet. I think it's still in committee or something like that. But very interested to see how that happens. I do want to see the kind of the bifurcation between CFTC and SEC done away with. And by the way, on that note, I think the reason we had that was because the CFTC was seen as a lighter touch. You had, the Bitcoin futures went live there first. You had Chris Giancarlo, who was more open to it, versus Clayton and Gensler, let's say. And that made all the crypto companies lobby for the CFTC to have control. Yeah. And that's another reason why it's a bad thing to have separate. You don't get to pick your regulator with money. It's a terrible way to run regulation, really. So I hope we see that gone away in this version of the bill that comes out. But
how do you think that would happen? How could that go away? Do you think it would be like a joint effort between the two, or some type of new agency?
I don't want to see a new agency. Some kind of joint effort between the two, or co-authority or something like that. Yeah.
Okay.
They both get to do it. Because the other thing is, there's going to be. Let's come back to that in a second, because we're talking about how optimistic I felt about Congress. I think I feel reasonably optimistic, I suppose. I think the stablecoin bill passed. We'll see about the market structure bill. Disappointing to see a lot of Democrats vote against Paul Atkins, who's I think he's going to be very good, but he's perfectly uncontroversial SEC chairman as well. I hope crypto should be bipartisan. I think it used to be at one point, so I hope we get that.
Not much that is anymore.
Yeah.
So Atkins is seen as pretty, friendly to crypto. So it's, I think one of the things that continued to come up on the roundtable outside of congressional action is, can the SEC take actions to open up sort of a path to registration, a one that is better able, I think, to be accessed by a much more broader cross-section of the industry, right? Like you're registered as a broker-dealer. There are others who have registered as broker-dealers. No one is registered as an exchange, obviously. And personally, I would really like to see that as the path, that we get national securities exchanges that are also allowed to trade digital securities alongside traditional securities. Do you think that's the right path? Is that practical, or part of the conversation on the roundtable was national securities exchange versus ATS, which I thought was actually a very interesting debate at the time, and sort of came down on both probably make sense, but at the same time, I'm going to lead towards the exchange as the sort of primary location for trading.
I would probably lean to the ATS model. Certainly probably biased on that one, but certainly in the short term, because I think you need to change a lot about the exchanges. I think the ATSs have a lot more flexibility on how they can operate, and I think what we need is some flexibility to recognize that crypto is a bit of a different asset class to securities. And I think we've got some legacy rules around exchanges that definitely cannot move forward onto a crypto exchange. And we did talk about the order protection rule 611 on the panel.
But no action relief would be pretty straightforward for something like that, right?
I guess so, yeah.
Just on the digital asset side, right? Obviously, you're not
Well, that's one of the things that acting chairman Ueda has said, is that he's offered out kind of, exemptive relief for these types of things. Although it did say time limited, which is a little worrying, because you don't want to go down a road that, then find you can't go any further and you have to turn around again.
For sure, especially with the investment it would. I mean, this is like, we're not talking about a trivial investment to get digital asset securities trading alongside traditional securities on a registered national securities exchange. That's a lot, right?
Yeah, exactly. Yeah, and then it's 5 years, and then 5 years is up, and then what happens next?
Yeah, and it's a new, who knows, a new, party that's in charge, and everything is different.
Yeah. So I think the ATS is a better path forward, certainly in the short term. And we need to move as well. Yeah. So that there's flexibility there, and we can get something in place. I think within a year of the starting gun, you can get something very robust in place, like in terms of federal regulatory system for crypto.
How do you think surveillance would work given that, let's say you had multiple ATSs trading crypto securities, but the bulk of the trading was not happening on registered venues? How does, any good way to surveil something like that?
I don't know. It's almost like you might have to give up on the surveillance side of things in a way. It's because you're going to have, because you're not, what you have on exchanges right now is that the SEC regulates the 16 or 17 exchanges that trade 100% that trade all the securities. There aren't other exchanges around the world they don't regulate also trading these securities. So I think it's going to come down more to, you can do surveillance on your, as a broker, we can do surveillance on our own clients' activities and try and make sure they're not doing, spoofing strategies or market manipulation or something like that. But I think at the same time, we have to expect that it's going to be happening on unregulated venues, and have policies around best execution that help protect investors from getting run over by one of these types of strategies.
Yeah, this one sounds tough to me. And how, what do you think there's, let's say you've got this, you have an ATS. Let's say you've got an ATS and you're trading some of these digital assets, and they're also trading in other places. Do you envision some kind of explicit price linkage between other venues and your ATS, or is it all arbitrage based?
Price linkage,
like an NBBO. So today, you've got feeds and you stay around, within the best prices, and that's enforced by the venue. Could you even do something like that in a decentralized world?
I don't think you could have an NBBO, like the N. You could have the BBO, and you could have different types of BBO, potentially for, and vendors could come up with this. Let the market kind of figure out. Okay, Coinbase, Kraken, Bitstamp, or whatever. These are reputable exchanges. This is the BBO on those platforms, and you can measure best execution against that. Let's say, recognizing that better prices may be on other venues, or maybe on AMMs or something like that.
Right. Yeah, these are the, especially as I was trying to think through, how would you even bring this stuff on exchange? You have a duty to surveil these venues, but I don't even know what that means in this world.
I think it would have to be surveilling the activity on your platform.
Right.
That's the only way you could do it.
Right.
Yeah.
Okay, so I guess based on all of this, the acting chair Ueda said that the SEC might be considering a short-term crypto oversight framework to allow firms to keep innovating while the agency works out a more permanent answer to digital asset regulation. I mean, what do you think that kind of framework could look like?
Well, I think it could be a sandbox for. That's a very broad statement, right? I think, from my point of view, what I'd like to see is let us start offering crypto through a broker dealer platform to customers. And we'd start off with the top 5 or something like that anyway if we were to go down that road. So I think that's one path forward. And I think there's the other question around what about, which the SEC spends a lot of time, and I think his comments cover this as well. What about the issuance and the sale of these tokens in the primary market?
Right.
I think that's almost a bigger topic of how you handle that as well. But I think that's, and then there was also something on the day before our panel, our roundtable, the Division of Corporate Finance put out something on disclosures around token offerings. I don't know if you got a chance to read that one. Yeah, I know there's a lot going on.
Yeah.
But that went into some detail about what they would expect to see. I mean, it was positive in that they're not going to, it sounded like we're not going to reject you as soon as you put this stuff in your registration form or your Form 1A for a Reg A offering. But it sounded like they're trying to build a framework for offerings where it starts off as a security, then becomes a utility token or something like that down the road.
Right.
So there could be a sandbox around that type of activity as well. I think we want to try things like lending. I don't think we do that with the public markets, but with, say, private market assets. Could we leverage DeFi technology to create a lending pool? That's something I think we'd like to try. Yeah. And I said on the panel, I said some simple things like let the smart contract do settlements. I mean, that is something we would need exemptive relief for as well.
Right. Yeah, I think these are all great ideas, especially on the settlement side of things. And I hear a lot on social media from people that are sort of there's so much complexity, and it's so difficult to understand. I think the traditional finance world of when you get into the nuts and bolts of settlement and clearing, and having something that was actually transparent and simple would be a breath of fresh air for a lot of people.
Yeah, and like we can do instantaneous settlement. We have the technology, right? But there's other things that's stopping us from doing it. And there is, in fairness, I think John Herrick from the New York Stock Exchange brought this up. There are reasons why you may not want instant settlement. You might want to do netting or something in certain markets, but doesn't mean we shouldn't try it in other markets.
Right. Or at least have it as an option. Have
it as an option.
Do want it.
and you can solve the pre-funding issue as well if you're using like a tokenized treasury product, so you're not the cost of capital doesn't go up.
And so this is like an example where tokenized securities hold a real advantage over traditional ones, right? In the speed at which they can be transferred, moved around, the certainty with which you can have that they're sitting right there and ready to be accessed or locked up through contracts, right?
Yeah, and you can, and now we have tokenized treasury products, which are basically earning yield. You can lock up the cash leg in a smart contract, pending the right price for your trade, and not be afraid of missing out on taking your money out of the market and losing interest. You can keep it in that. If it's the cash leg, it can still settle in cash, but you're earning yield at the same time.
So all of this, okay, it's a lot of talk about potential, and any inkling of like what do you think is going to come out of this and when? Any idea?
Well, we've got 3 more roundtables, which I think run through the end of May, and then there's going to be obviously some kind of distillation of the information and so forth, coordination with other agencies, the House Financial Services Committee, the Senate Financial Services Committee. So I think there's a lot of stuff going into the sausage on the way out the factory here. I'm optimistic we'll get a decent market structure bill, but probably potentially some exemptive relief or sandbox type policies in the summer as well.
Okay, so that would be a nice.
What do you think?
Forward, right?
What do you think is going to happen?
Yeah, it's hard to say before Atkins gets in. I feel like we're going to get a lot more visibility into this as he starts making official statements as the chair. But I do think that it felt like there's appetite for this regulatory sandbox idea. To me, that I think the SEC can do a couple things on its own relatively quickly. The regulatory sandbox is one example, and I think the things that it can do quickly on its own, they probably will try to do, because it does seem like from the top there is this will to push forward. And not just the top in terms of like the SEC, but the top in terms of the government. This is a major priority. So I do think a regulatory sandbox is probably coming. I could very well see, like you're talking about with this guidance from corporate finance, that seems to be indicating it, which is what I would have thought even before that some type of path to register these offerings has to be in the works, and it has to have been from the beginning of the year. So to me, that's the kind of thing that could also potentially come out, let's say in the summer, or towards the end of the summer. So if you have some type of path to registration, a regulatory sandbox for firms to start to offer custody and trading solution of these securities, and some level of regulatory clarity about how the SEC is going to be moving forward over the next couple of years, I think those things together, I think, could happen in a relatively short amount of time and would be a really big boon to the onshore crypto industry in the US, right? I think those are the kind of things where people will start to invest in US efforts, and we'll start to feel a bit safer, both from an exposure perspective, but also from an investment perspective, that people can start to get the kind of information that they need to make, smarter decisions on investing. And you're going to have, I think, strong industry effort to develop an ecosystem in the US. That's just sort of, I don't know, I don't have anything like insightful in terms of like what I know. That's just sort of me looking in from the outside and reading the tea leaves, I think.
Yeah, I mean, the important thing is there is a motivation here.
Yeah, right. Yeah. That's right. Yeah. And that was one of the things that they told us going into the roundtable. That they said, let's, for that second half, they said, focus on things the SEC can do now, right? What can they do? What do they have the power to do? What would help? And I thought that was a really fascinating sort of set of recommendations and conversation at the end. And just the fact that that's what they were asking for tells me that's what they're trying to do, right?
Yeah, exactly. By the way, if you want a kind of a hint of what Paul Atkins is going to do, we should look at the Digital Chamber's policy presentation, because he was on the board of the Digital Chamber of Commerce. So I think that's going to be pretty aligned. Okay, all right. I'll definitely take a look at that. Anything else that we missed? Anything I think, let me bring up one thing, is that I think is like I don't think there's a pathway where everything is going to be regulated by the SEC. I think we're still going to have for sure things like the AMM pools, the Uniswaps and so forth. I think Catherine from Uniswap made a good point. It's like, it's technology, it's not a broker dealer. But what I am advocating for is, let there be this regulated path. Let me, as a Texture, as a SEC regulated broker dealer, offer crypto to our clients in a safe, compliant way, following these rules and processes and procedures that have worked over the decades, recognizing that there's still going to be these other areas, these other pockets of liquidity, whether they're offshore or whether they're fully decentralized, that aren't regulated in the same way. But caveat emptor when you're going to these platforms. Right. I think they can coexist. And do you see, as a regulated entity, you would probably still want the ability to interact with those platforms, exactly, right? Especially if you have a best ex responsibility. Exactly. I think that's the way to do it. So we're not cutting off the liquidity, but let us take on the responsibility, or broker dealer say, we'll do due diligence on this venue, and if there's better prices there, we'll try and get them for our customers.
Yeah, I agree. I thought her comments were interesting, and I think it's really hard for the SEC. The SEC is a centralized regulator. They're dealing with the centralized financial system, and now you have decentralized finance. It's hard to wrap your head around. How do you engage with it? How do you bring it into the fold? Can you, and in what way should regulated entities be able to interact with it? How can a centralized regulator deal with this, fundamentally decentralized system? It's like a super fascinating question.
Yeah.
And I do think that your thoughts on putting that responsibility on the gatekeepers and making sure they're registered and regulated and they have these responsibilities makes a lot of sense, provided you as a regulator are technology forward enough to oversee them, which I think that's a big caveat right now. But all right. Well, anyway, I think this was a fascinating conversation, Richard.
Thanks, Dave.
Yeah,
thanks for inviting me, and see you soon.
Absolutely, and we'll have you back, and we'll bring on Nick Lizardo, who was he was a great moderator for our panel. But we're gonna watch the next couple roundtables, and then have you back on with Nick, and then we'll talk about everything that's happened, and we'll be able to.
We can do a post game. That's fun.
Yeah, exactly. That's right. All right. Well, thanks everyone for joining us and for tuning in. Definitely if you're watching us on YouTube or X, leave your comments below. Let us know what you thought and what you'd like us to answer. What did we miss? What did we get right? And I know you'll already tell us what we got wrong, and that's okay. But thanks everyone for tuning in again. Always appreciate you. Great to see so many people interested in these topics. And we will see you next time.
Cheers.